Internet stocks and some of the seismic changes that we got this week from both a macro and company-specific perspective. Our next guest is skeptical of some of the biggest names of the week, including Netflix and Snap. Joining us now, ACME Capital's Hany Nada. Hany, it's great to have you. What is front and center for tech as we go into the thick of earnings season? What is already baked in?
Good morning, Deidre. Thanks for having me. So look, I think the tech valuations in the public market have been more than cut by half in the last 3 or 4 months. The sentiment has gone from obviously growth to profitability. It takes a long time for growth companies to go from the growth mode that they were in into profitability. So for example, if a company is spending 60 or 70 cents per dollar of revenue for growth, they have to cut that back to 20 to 30 cents. That takes time. Customer acquisition costs, product costs, marketing costs, all have to get cut back, and that will take time. And you're starting to see the effects some of the companies are doing and having on their growth rates and on customer acquisitions because of that.
So does that mean, Hany, that you think that we've seen a bottom? I mean, you take a name like Meta, which is down another 12% this week, more than 50% from its 52-week high. Is there an opportunity to pick up some of these names now heading into the season?
It all depends on your perspective of what's going to happen to demand. So far, we haven't seen any decline in demands from customers, whether it's a consumer or a business. All of our companies are doing well in their quarters. Their quarterly results are coming in line, if not better than expected. And so if you believe that's going to continue, most of these stocks are cheap. If you believe that we're going to go into a recession and demand is going to decline, I think they're still expensive.
Hany, I wonder what your take is right now on, take, for example, some of these work from home baskets of stocks versus, say, a travel basket of stocks. They've almost completely reversed all of the COVID gains. Shopify this morning, pretty much back to a pre-COVID level. Would you expect that trend to overcorrect or flatten out at this point?
Well, I definitely think it's overcorrected because they had made gains during COVID, and I think some of those gains are going to sustain. Obviously, the COVID stocks have all had a huge pendulum swing from one to the other. Netflix, Zoom, others have had that. So I think it's probably overcorrected, but I think it's overcorrected in the same way that growth stocks have overcorrected because of the willingness or wanting of profitability from investors.
Right. What does it do to investment trends? We could do it on e-commerce. We could certainly do it on streaming after the week we've had there. I mean, is cost discipline now the new religion?
Well, it is, but you have to, long term, what is the best for a company versus what's best for the stock price? I'm a firm believer, and if you have growth and you have a growth opportunity, you should be investing into that. Now, if you're a company that could potentially see slowing demand, you have to be very careful with spending. So sectors that I like right now, or we're like as at ACME, are security software companies. I think there's really interesting software companies, especially in the security space and especially in the industrial automation space, that are going to be counter-cyclical to what's happening in the world if we do go into a recession. We're still long frontier tech, whether it's quantum computing, whether it's space, whether it's semiconductors, we're still very long. We have 3 companies in the portfolio that are public that are doing extremely well because of that. Also, we're leaning heavily into Web3 and what's happening in the crypto world, especially in the world of utility crypto, not currency crypto. And frankly, some of the regulatory things that are happening are also affecting some of our other portfolio companies in the online gaming space. So there's only 19 states that have online gaming. What's happening in Florida and other states is going to push states to get more tax revenue, and that's going to allow for regulation to open up more gaming. So there's companies like Flutter and DraftKings that are going to benefit from that.